Hello, I'm Richard Hunter and welcome to our look ahead for the week commencing the 25th of November. It's been a fairly turbulent week, both sides of the pond. Certainly in the UK, the cat was put amongst the pigeons after the Johnson and Corbyn debate, which Johnson narrowly edged according to an online poll. However, it was taken in the market that perhaps Labour wasn't a complete write-off as to a potential next government. As such, there was some weakness in the FTSE 100 as well as sterling. Of course, the big story in the US remains the ongoing trade spat with China, and this is likely to rumble on for a few weeks yet, as it still remains unclear whether the Phase 1 agreement will be implemented before the end of 2019. That being said, the major indexes still remain ahead in the year to date. Dow Jones up 19%, S&P 500 up 24%, and the Nasdaq up 28%, while in the UK the FTSE 100 in the year to date is up just under 9%. Looking ahead to next week, there's a fairly light corporate agenda. There's a couple of stocks perhaps to look out for. The food and service operator Compass Group, FTSE 100 company, has got some full year numbers, so we'll be looking for the normal things about new business wins and indeed contract retentions, let alone how the company is performing in the US, Europe and the rest of the world. Shares have been on a fair roll recently, up about 19% in the last 6 months. Moving on to Marston's, the pub and brewer operator, they've got some full year numbers as well. There's been a fair bit of froth in the sector of late. We've obviously had the Greene King takeover. In terms of Marston shares, they're up about 22% in the last 6 months. And also what they've been doing is selling off some of their wet-led pubs, in other words, the ones which are mainly reliant on drinks rather than food. They announced the other day they'd sold 137 pubs for around £45 million. They've got a year-end target for about £70 million worth of disposals. And finally, British American Tobacco have a trading statement. A share, as has been the case in both the US and the UK, the sector has been under pressure. BAT's shares are down about 20% over the last year, although they did get some good news the other day when it was announced that the US authorities were going to put some nicotine regulations on hold. But in terms of the trading statement, we'll be looking to see whether BAT remains the cash generating machine that it is, enabling it to keep up its dividend yield of just shy of 7%. Thank you for watching. Have a great week.